Alrighty, good morning everybody. Happy Tuesday. We did go ahead and roll over here. If you didn't get the message last night, I think I put it in the main chat room. Yeah, at the end of the night, I put a post in. So we've moved into the September contract now. So we removed all of the old eye levels or the old market scaffolding levels, and we had to get rid of all the signals and everything and start with a nice fresh chart. So this morning what I did was I was able to go in and kind of roughly plot some of the eye levels or the market scaffolding levels compared to where the levels were on the June contract. So we do have some in there. In fact, the one that we were testing at the end of yesterday up at the highs here. So if you look where my cursor is here, this is basically the high of yesterday here, and we had a scaffolding level right there. And remember what we said yesterday. We said if we could get through the high of the day before, which was what, I think Friday of last week, if the market ended up getting through there, then it was probably going to be a nice pop right up into the next scaffolding level up here. Well, look what happened. We just popped up in the high. Basically, the high of yesterday was our scaffolding level. It came right to it. It pulled back. And then I guess what, maybe in the last couple instances there, it popped up a couple ticks to close at 91 there. But we were basically within a point of the high of the day there with that scaffolding. So this new one I threw on there. And then we've got some up above us here this morning and some below us. I did not plot every single market scaffolding level. It's just from about 42.40 area all the way to 45.80. So it encompasses, I don't know, maybe 100 points to the upside, 150 points to the downside. So that's just a little disclaimer regarding the new charts here. And then I want to talk about the news before we jump into this morning's pre-market. So again, this week is going to be really busy. Look at all the red you see on the chart, or on the forecast here, or the schedule. We had CPI this morning. Anyone who was watching the chart saw this huge spike. You see this huge wick to the upside and downside over here on the 3-minute chart. And even if you look at the 30-minute, you can see just a big gigantic candle here. This was essentially the CPI release at 8:30 Eastern, 5:30 Pacific. And then for the rest of the day, there's no other major news going on outside of the fact that we are actually have the FOMC meeting starting today. So you never know what's going to be said that might have a little effect in the market. And again, there's no way to predict what's going to happen here, but just be aware that the FOMC meeting starts today, and then we'll, by the end of tomorrow, we'll get the announcement. So we've got that stuff coming up, and for today, like I said, nothing else notable. So be aware of that. And now let's get right into the charts here. So just to quickly recap yesterday, and again, try to do it in about a minute here, is we came in the morning and we said that if the market couldn't get through the highs of the day before, and let me bring this back here so we have the right levels. So if we couldn't get through the high of the day before, this red line, we did have what could be a daily bearish signal. So let me bring that up just so you guys understand this stuff the more I review this. So when we came in yesterday, remember we said from the high of the day before, because we had popped up like this, our RVI, if you go back to that candle, was pushing lower. So when we came into yesterday, before we popped, before we broke out, we saw what looked to be something like this. We saw a potential divergence. So when we came in, and let me go ahead and might as well mark it there up off the high, we had what looked to be a potential bearish signal on the daily. And then remember we came down to the 4-hour, and we didn't have an agreement on the 4-hour from the high of the day before, or for the high of Friday, but we did have an overnight bearish signal from the highs of the overnight session going into that morning. So we had a couple things. It wasn't a perfect alignment because of that. So there were some clues maybe there was going to be a pullback. Here's the caveat to that. When they pulled back right around the open, we actually got a 4-hour bullish signal from those lows, basically the lows of yesterday, right after the market opened, we got some bullish signals on the first candle, 4-hour candle, and then the second 4-hour candle that printed for that morning. And then we did eventually break out after that. So we got a counter signal after I did my broadcast. And I believe maybe the hourly had some stuff, and daily just doesn't have enough resolution to see anything from the lows. But so we got counter signals, and then the breakout did happen. So again, going back to what we were talking about, bring this down to the shorter time frames. I said, look, if the market can be hold below that high, and we can get down below VWAP and get down below 50% of the day before, and that was one of the key levels we wanted to watch yesterday. They never made it down there. They came down, bounced like 3, 4, 5 points in front of that, and then by about in 2 hours after the open here, look what happened. Let's zoom in here. They held VWAP all morning, couldn't get through, and then finally they popped through, pulled back, bounced one tick in front of the 200 there, and then look at this, pulled back right to the 200. A beautiful, this is after the breakout, right? So we're watching it, it's looking bearish, we have some bearish clues, and then what happens? They pop it through VWAP, pull back, pop through the scaffolding level, get through the holy orange power level. These were the levels we were watching. I said, if they hold below this level and they hold below this level, that's not, that's going to bolster that bearish case. But if the bulls jump in and they can get above the VWAP, they can get through our scaffolding, they can get above the holy orange power level, well, maybe, and then they can get through the high of the day before, well, that's when we're going to target a long up into our scaffolding. So look what happened here, guys. I mean, perfect opportunities to get in on, again, very, very, very low risk, trade setups. And look at that. Pulls back right to the 200, breaks it by a tick. It even basically comes right back into these resistances we got just after the breakout through the Hopel. And bam, right off of it there. Took a long there. That was it, right? Came all the way up to the high of the day before. And then there's the breakout. And again, held the fast moving average the whole way up with very, very limited risk. Held the FMA there. Once the breakout occurred, beautiful opportunity on that deeper pullback into the FMA. And then look what happened. We came right to our scaffolding. Again, I adapted it here to the new contract and right to it. And this is exactly what we saw on the June contract yesterday. Right to it towards the end of the day. Held it, and then, like I said, right at the end of the day, I guess they popped it a couple ticks up to right to 91 there. So, pretty sweet day. Now, let's get into this morning. Spent a little too much time there. Let's go and look at, first of all, I want to just go to the weekly and just zoom out again and show you here. Look at our week. This is the current week we're in. This was last week. Remember, we looked at potential hold of 50% of the previous week is a good thing for the bulls, and so far never even got down there. And look at this huge weekly candle, and look at what we're pushing up into, the major 61.8 retrace that we've been talking about for the last week. So if you've been here for a couple days, you should remember from the all-time high all the way down to the major rotation in October of last year. That 50 was that area we were talking about being a major trouble for about 7 months there, and then finally, a couple weeks ago, we finally broke out. So we're coming up into that 61.8 at 44.2775. I've got it marked down here on the shorter time frames. When you zoom out, that's our major fib level right there. So 44.2775 is coming up, and we're just coming into. Remember yesterday, the high of the day was essentially our scaffolding. We petered out. We held the scaffolding from the upside here in the overnight. This is the CPI news where things just went really wonky for about a minute, and it popped through, and now we're coming right to our next scaffolding, and then it's up to 44.2775, the 61.8, the major 61.8. If the market gets through there, and it's not just a peak above and fail, we're coming up into that major high that we need to break in order to potentially start a new bullish trend here on the higher time frames, right? If we can get through this high, from all the way back in whatever July, August of 2022, then we're starting to make new highs and potentially starting this new bullish trend. So some interesting things to keep in mind from a higher time frame. Now let's look at as far as signals and things this morning. So again, remember we saw coming in yesterday, we had what could be interpreted as a bearish divergence from the high of the day before. It's not there. So and this is what I mean. When we're anticipating signals and seeing things potentially starting, you have to keep in mind that when the next candle prints, if we don't get a break below the signal candle, in this case, we would have wanted to see if this was a true confirmed divergence. We got the push to the new high, we had the RVI push to a lower high. We would have wanted to see the low of that signal candle when we got where we got the signal from actually break. We wanted to see price come down, and if price actually broke the low of the day before there, then we would have actually had that hook, and we would have had essentially, this would have actually completed, hopefully, since we're pushing lower, and we would have had a divergent signal. However, what happened yesterday? Yesterday we kind of petered out at the open, and then by an hour, 2 hours into the open, it popped out and we broke out even higher. So look what happened with RVI. Continued to pop out and push higher as well. So the signal was a false signal. It was showing up as a potential, and then the next candle printed and we continued to push. RVI continued to push, so we no longer have that signal. So this is just kind of like a little training. In the future, I don't know if I'm going to be so specific about all this stuff. I'm just going to tell you what we see, and we'll go with it. But that was a failed signal. We got a push yesterday, so it erased that signal. So on the daily right now, things just look mega strong, right? They're really, as far as any type of bearish signal, there actually hasn't been a bearish signal on the daily chart for quite a while. I got to go back in and draw a lot of this stuff in. There was basically a bearish signal right here off this high, and we got the pullback. And then after that, it was just a shallow pullback. Again, just a nice 50% retrace. Maybe not to the tick, but within 2 points. Pulled back to the 50%, and now we're popping out. And that was the last bearish signal we had on the daily. So from this daily perspective right now, everything just looks strong. There's no clear bearish signal. And like I said, as we were breaking out and continuing to push for the last week and a half, I've said multiple times, you can watch the recordings, we don't quite have anything in the charts when we were back over here telling us it makes sense for the market to rotate back down. There was no clear bearish signals. That was up until yesterday when we saw up here a potential signal right around this area, but it was a failed signal. So right now, from the higher time frames, even from up on the weekly, there's no sign of a major bearish pullback. Does that mean we're not going to have a bearish pullback and maybe some extreme bearish pullback? No, it doesn't mean we're not guaranteed that, but there's nothing that from my trading system telling me it would make sense for this to rotate back down. Now that could change by the end of the day if things start to change in terms of signals. But at the moment, like I said, again, for a week or two now, there's nothing on these higher time frames hinting at a major pullback or major failure. So just keep that in mind from this higher perspective. When we jump down to our 4 hour to see what kind of signals we might be getting over here, like I said yesterday, from the lows of the day, or at least the lows of the open session, the regular trading hours, we had two really nice 4 hour bullish signals, and we got the breakout as the day progressed there after we got these signals. So right now, from the high we're making, notice we're right at our scaffolding. There's really nothing, again, from a 4 hour, unless you want to interpret what maybe the stochastics are showing, that we pushed just a little higher here, and actually the stochastics haven't quite pushed. But they're also sitting in just a very strong area of the stochastic range. RVI, again, not really showing a divergence just yet. There might be something setting up here, and maybe once this closes after the open, we'll have to revisit. But again, nothing too bearish looking on the 4-hour either. So I might have to eat my words. Like I said, I say some mornings and I'm not seeing much of anything, and then something happens. But I really just don't see anything bearish here from the weekly, the daily, and the 4-hour charts. So let's go down to the hourly here and see if we have any other counter signals. And what we got on the hourly here was a couple bearish signals in the overnight session, and we got the pullback. So it popped up in the overnight session. We got two bearish signals from an hourly perspective, and the market did kind of pull back and retrace. And I didn't really look at this, but kind of interesting to see here from the lows of the regular trading hour up to that high. And look at that. I mean, textbook 38% retracement of the previous leg. Nice leg up, pullback, holds the 38 within a couple ticks, and now we're pushing up. Oh, look, to the 27 extension, which I said I didn't want to busy you guys with. But right to the 27 extension and the pullback. Such a textbook thing to see, guys. The more you watch the fibs, the more you basically just follow them, you're going to see these type of retracements happen over and over again. So in the news event this morning, right down to the 38, and it popped out. It's unbelievable. So from the 60-minute, we're getting some counter signals from the high we're pushing to right now, which is still technically the overnight high until the market opens here. So I do want to be aware of that. Let's go ahead and we'll make it dotted. So it's kind of a potential setup. Again, remember guys, when we see these potentials, doesn't mean they're any guarantee. We have to see how things evolve from there or develop, but it's there. So I'm not going to ignore it. I found in the past when I have a specific bias or something and I try to ignore something, like something going against my bias, like a bearish signal like this on a higher time frame, sometimes I get burned because I'm like, yeah, the signal's there, but I don't know. I personally, given everything else, think this, and then the signal ends up holding for whatever it's going to do, right? So don't ignore that we're right at our scaffolding level. We're right at, like I said, the 27 extension of this little leg, nearly to the tick. And we have an hourly, which is a pretty substantial intraday time frame, giving what could be a bearish signal. So maybe that, remember, we don't have anything bearish from a higher time frame perspective until we get to that hourly. So that might just mean we, again, are just going to have a shallow pullback here. It's not quite telling me with, the stars aren't aligning right there with everything on the high time frame showing bearishness. It's just the hourly. So again, that might just be for a micro pullback or something like that. That, or it's going to start to develop here and pull back, and then maybe over time, this 4-hour will start to show something. But that's what we're seeing here up top. Okay. So let's put it all together now. Like I said, not quite a holy alignment of bearishness from that high. But we do have that hourly signal up there. The 30-minute maybe as well is in agreement. The 3-minute was also a bearish signal right there, 2 ticks in front of our scaffolding. So this pullback makes sense on the shorter time frames. But from the higher time frames, I do think that we're probably going to come back up. Okay, so that's the general idea here this morning, is that I don't think the high is in. Although we never know, right? But from my signals perspective, it looks like we probably have more to go. And that might mean, and I always have to say this, that might mean that they have a little more to go here, and it's only like a test of the scaffolding level, or it's, a breakout, and then they bring it back inside that previous daily range. Nobody really knows what's really going to happen. But we have our scenarios in place. So remember, we do kind of expect there to be higher highs this morning or some test of the highs of the overnight session here. So that's just given from our higher time frame perspective. So let's look at the levels that we have here this morning. First things first, right back into the 200 here. So you never know what could happen here on that type of pullback. It's also for the day, let me just confirm here. This is also, oh, okay, I thought it was going to be perfect 38, but it's not. But the VWAP happens to be lining up perfectly with a 50% retracement of basically the whole leg of the overnight session. And it's also the holy orange power level. So if they get through the 200 this morning, right there, about say 43.98 half to 43.99 half, right in there, that wouldn't be a surprising area to see some type of rotation, given that our higher time frames are a little bit leaning towards the bulls this morning. So what I'll do is shade this guy in, and we'll have it here on the 512. I guess I'll shed it. Oh, it's all charts. I'll bring it out to say 10 a.m. this morning my time, which is 1 p.m. Eastern. And so that's just a little thing there. Remember that as the VWAP starts to develop and change throughout the day, it might not be a perfect alignment here from the holy orange power level. But for now, and that's why maybe I should bring this down to just maybe the first couple hours, maybe the first hour and a half. Because this is going to change. This VWAP is going to move. But if it all looks like this as the market pulls back, or if it pulls back, that to me looks like a really, really rich area for, again, a low risk opportunity. It doesn't mean it's going to work, but if it doesn't work from here, then you know that you have limited risk on your loss. So this morning, there's the 200. I've got the Hopel, the VWAP, and the 50% retrace of the whole leg sitting right there around 98. And then a little bit further from there, the market does end up getting through VWAP, and it gets through the 200, gets through the VWAP and the Hopel. We're looking at a revisit back down into the close of the day before, which happens to also be the high of the day before right there, about 43.91. So these are the levels you want to be aware of on your chart this morning. The 200, this general area around the VWAP and the Hopel, and then it's going to be down to the close of the day before, which is also the high of the day before. And being that we did kind of pop away and open, we're going to open here in a couple minutes. We opened away from the close. We do know this happens very often. The market will come down right to the close of the day before and get some type of reaction right off of it. So that's another potential scenario that we want to be aware of if the market pulls a little bit deeper here this morning. If the bears are strong enough, which is a possibility, even though it's not quite in the cards here this morning on our higher time frames, but if the bears somehow jump in, the break of the scaffolding level there around 88.75 is probably going to bring us all the way back down to 50% of yesterday. And that's going to be down here around 43.70. All right, so this is another one you should have on your charts. 43.70 being 50% of the day before. And being that we're going to be zooming out to the higher, to the area away from our shorter time frame 512 levels, I'm going to go ahead and bring up the 60-minute here so we can get a broader perspective on what we're pulling back into. So again, there's the 50% of yesterday. It's also, give or take a tick or two, that major swing from 2 days ago up here at 69.25. So, again, within a tick or two of 50% is going to be that level. So let's bring this up as a swing high. We'll bring it out to the end of today, which would be 3 p.m. my time. Apply. Okay, and so when we get down to 43.70, just be aware that swing high is at 69.25. So another little I could shade it, but essentially a little pocket right there. That makes a lot of sense. And then we're down into the next scaffolding down here around 60. And then the low of yesterday, which was 43.4875. That's going to bring us down over 50 points from where we are right now. So if they end up getting through there, which notice the low of the day before here was some great resistance going back maybe for the last week, right? Remember last week with major resistance over here. So nice potential support level there as well. Okay, so don't forget about that one. And then it brings us to our new scaffolding down here at 32, 43.32. And then down into 43.08 quarter. I think that should cover the downside here. Don't know if it makes sense to continue to list out any of the other levels right now. And then I will add in this area of major resistance that actually ended up being pretty good support somewhere right around there at about 42.86. So we've got this kind of structure zone here at 86. So that wouldn't bifurcate the two, but essentially looks like right around 50%, maybe a 61.8 or 38 of those, the range of those two. So template load, swing high low. What did we say? 42.87. So we got that one on there as well. So 42.87 out to 3 p.m. today. And that should cover everything to the downside here. If, like I said, the bears get through the Holy Orange power level and VWAP, they get through the close of the day before and the scaffolding a couple points below that, and they can get through 50% of yesterday and the low of yesterday, then those are these other levels down below. Okay. The market is just about to open here, and the only thing I didn't talk about was above us. So if they end up getting through, well, we talked about the beginning, but if they get through the scaffolding, which is the resistance right now, and they can get through that very, very major fib retracement there around 27.75, 44.2775, then we've got our scaffolding levels up above that are based on the previous contract. So we got 44.53 half. We have 44.79 quarter, and then we have all the way up here 45.22. So have those up on your chart. Market is just opening here, so I will get the short time frames up. Make sure you can see them. And happy trading. Let's get 3 out. Let's get our 30 back out here so you can get a bigger picture of everything that we're pulling back into. And then just keep in mind, you can't see it on the 30-minute over here, but that green line, the low of the day before, is basically last week's major resistance that we kept rejecting from. So that should give you a good enough view here on the 30. Alrighty guys, so I will see y'all tomorrow. Happy trading.